Sorry, I'm just turning down my TV. Okay, so I don't know if you guys can hear me or not. I don't really have the mic. I mean, at the camera, I had the camera on, but I'm not gonna have it on today because it's just acting weird. But yeah, guys, this video is for beginner forex traders, and I'm specifically gonna go over the first essential thing for technical analysis. Not doing too much fundamentals today. This is just technical analysis, so that just means on the chart analysis. We're not analyzing any news or any economic data whatsoever. So if you're a beginner forex trader or a day trader in general, mainly this video is for forex and futures traders. The first thing you're going to want to understand is market structure, because if you're trying to trade without understanding market structure, you're going to actually buy and sell at the wrong areas. And to make money, you need to buy and sell at the right areas, because if you think about it, all the market does is go up, down, up, down, up, down, or it goes down, up, down, up, down, or it goes sideways, right? Like I said in my previous videos, those are the only three types of market structure that actually exist in the market. So there's only three types of markets. Right now, what is this market? Down structure, right? Down. I had to pull some Dora Explorer shit. So yeah, so down structure is this right here, bearish structure, and what we're going to be doing is understanding these three different types of structure today. So what we're gonna do is we're gonna go to AuDCAD, USD, JPY, then this pair. So the first thing we're gonna do is I'm gonna go over with you guys, or I want you guys to basically be able to spot these three different types of pieces of structure. So the first thing we're gonna do is go to AuD, and I already have this kind of marked up because I was doing some analysis on it. So we're on the 4-hour chart. 1 hour, sorry. 4-hour. Now we're on the 4-hour. So is the market, what does the market look like right now? Zoomed out, it looks like one of the three markets that we just talked about, right? Bullish market. But if we zoom in closely, we're in a consolidation phase and we just broke out of it. We were in a consolidation phase, which is the phase that I just told you guys on the other page, this phase, right? So the market can go up, down, or sideways. Right now, right here, the market was going sideways for a while, which is why I didn't actually trade this pair, because I don't trade when the market's going sideways. I trade when the market is moving with clear direction. So the first step to trading is we need clear direction. So I'll even write that down. Clear direction. So hold on a second. My keyboard is just weird. Clear direction. Hold on a second. Clear direction. That's the first step. I know it's sloppy. The information is more important. So clear direction is the first essential step in day trading, forex trading, because you need direction to make money, because you're making money off of the price fluctuation. We don't make money unless the market moves. Movement is money in trading. So that is why we need clear direction. Okay? So, like I said, there's three different types of markets: sideways, bullish, and bearish. Bullish is up, bearish is down, sideways is sideways. Right now, price, I'll point an arrow to it, right here, currently broke out of this like week-long or 2-week-long sideways trend, and I'm glad. So what I'm actually going to do is I'm actually going to look to either sell or buy. I'm not going to buy, even though it broke out, I'm not going to buy until we break this demand. Sorry, this supply over here. Supply, this is where the area is sold off from, right here. Okay? And we had strong selling right here because of the size of the candles. So the size of the actual candles always shows you the size of the move. So, it shows you who's in control of the market, right? It shows you who smart money is. Smart money, if you guys watch my other videos, smart money is a nickname for the whales in any market. The whales are people that have the most money in the market, and because they have the most money in the market, they influence the market and they cause it to move, right? So if we look and I turn the chart to red and green, you see those giant red candles on the left? Those giant red candles on the left were created by smart money, right? So someone or some institution, considering this is a forex pair because this is AuDCAD, this is an institution. So an institution or a bank sold off here, because in the forex market, the banks and institutions mainly control the forex market. Other markets, it's the same thing, but like for example, crypto will actually have some specific people that can actually control the market, because specific people that own, for example, Bitcoin can control the market because of the amount of Bitcoin that they have. The same thing works with the banks. So the banks and institutions are the ones that control the market and have the most capital, and whatever they do actually shows on the market. So right now, this shows us that the banks were selling off here because we're trading Forex, and right now the banks are buying because we're going back. We're going back up, and we went up and broke this liquidity right here along this line that people like to trade off of. And so I'm actually not going to be buying here until I have confirmation that price will break this range, this sell range. So this, what I mean by sell range is, okay, so when price started to sell off back here, we had a high. The high it sold off from was here, the orange line, and the low was here, right? And ever since October 11th, literally, the market's been in the consolidation going sideways. It hasn't really been going anywhere, right? The market's just been going sideways ever since that red sell-off point, right? Sideways movement all along here. And then finally, now price is just now going up, right? So price is either going to go and continue going up, or it's going to go down. And I'm not going to actually trade anything until I see price either react off of this range that we're in. So price needs to react by going down, and then I'll get into a sell, or price can go up. So when you're trading, you actually want to have a system in place that lets you know when to buy or sell. Because if I didn't know what I was doing, what would happen was I would just be entering random positions, and I would blow my account. All I'm doing is I'm going up and I'm showing up to the market, and I have a system in place. And when certain things in the market meet that system and certain steps meet that system, then I execute a trade. But if the steps that I have don't meet what's showing me for my system, like let's say the steps are only enter trade at 9 o'clock, and I'm not entering a trade at 9 o'clock, that's going to affect my trading. So the next important thing in trading is to follow your system, because if you don't, that's your system basically is essentially the stability of your actual trading balance, so your trading account, right? So if you don't follow your system, your trading account will flop. If you follow your system, your trading account will stay solid. So stability and core of your trading account, which is essentially your business, is dependent upon you having that ability to manage your risk properly by maintaining your commitment to that system. Okay, so let's go to UJ, right? What's the trend in UJ? What is this trend, right? We talked about the three markets, right? Bullish, sideways, or bearish. And sorry I'm using orange. I usually use blue. But yeah, so what market is this, right? And I know you guys already know, but I'm trying to make it really, 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 really simple, because I know a lot of traders don't make stuff simple, and I know it's hard to kind of figure this stuff out. So I want to kind of make like these mini videos for you guys to understand it bit by bit and actually understand this. So look on to your left, look at the chart, and if you notice, the market is what? 1, 2, or 3? 3, right? Because the market is bullish, right? Okay, so now that we know we're buying, because to make money, the market's going to continue going up, and we need to make money by following the market, not going against the trend. Because if we go against the trend, we're not going to make money, right? Because the people that have the most money control where the direction of the market is going. So if we put money and we're trying to go against that and we sell, that's stupid, right? Because we're going to lose money. So that's the whole point of our first step, which is our first step, which we talked about, which was our market structure, right? Our first step is market structure. Sorry guys, I'm trying to go back to the chart. Sorry, yeah, market structure, clear direction. So clear direction is our first step. We need clear direction by finding market structure, which we did, because you guys saw that the current trend on UJ is 3, right? Bullish. So what we're going to do is, we're on the 4 hour. So what I do on UJ, since UJ moves really, really freaking slow, I start on the 5 minute, and then I zoom all the way out. And then what I do is I put it on red and green so you guys can understand it more simple. So, well, like more easily. So I'm going to get rid of this Fibonacci there. I just use that for my ranges. So I don't really use the Fib a lot. Our current trend is bullish, right? So we need to identify our specific highs and lows that are maintaining this trend. So right now, if I go to the full screen, our high right here is here. Our current high right there is there. Well, this is really our current high, right? I'm highlighting it with blue circles, right? And then our low is here. We have a low. We have a previous low. We have another high here. We have another low here. And we have another high here. So these are all the highs and lows. But the most important highs and lows that are actually showing us that the structure is obviously high, right? That you see at first glance. I can delete these two in the middle and leave those four, right? So this is the structure that's maintaining our trend. Sorry guys, I just heard something. Yeah, go ahead and skip the video a little bit. All right, I'm back. Okay, so yeah, so we have 4 pieces of market structure in total, showing that we're bullish. So now we're gonna find out where to buy. So we go right here. All right, so when I'm buying, I always want to buy low. So if I want to buy low, the first step is identifying your current. We identified the trend, we identified our direction. Now we need to identify the range, right? So let me write down these steps. So I want you guys to really understand. So identify direction. And identify. Sorry guys, it's taking me a long time. And identify. I just kept hearing shit in my house. Identify range. All right, so we're on the second step. The first one was identify direction, right? And let me just zoom this in so you guys can see it. Identify direction at the top. We did that. Identify range, which we're doing now. So our range is our 2 pieces of market structure that were our current high and low that we're in, right? So our 2 pieces of market structure, our current high low is this. Our current low is here and our current high is here. So that is our range, right? So if I'm buying, I want to be buying within this range, and I'm probably going to look low, right? So if I take, there's this tool called the fib, or you can use the GAN box. I'm not going to use the fib because I don't want to confuse people. I'm just going to actually divide this range in half. So boom, this is called the GAN box tool. I use it to divide ranges in half to let me know where I'm going to buy and sell. So the middle line, you notice that there's 3 green lines, right? The middle green line represents 0, it's 0.5, right? Represents the half of the range, the middle of the range. The bottom half is where I'm looking for buying, and the top half is where I would look for selling, but I'm not selling. So the bottom is called the discount level. So when you're buying something in the market, this is what they would say. They say, okay, so do you want to you have to look, if you're buying, you need to buy at the right discount level. The discount level just basically means your cheap price to buy at before the price goes up. So this is the cheap price that we're looking at, because if we look at our current range, right, our current high and low, notice where on the price scale, right to the right, notice where on the right it shows the scale for the actual high. 152.575 is the low, and 153.195 is the high, right? So obviously we want to buy towards the low, right, towards 152. So that's just an example, so you can see numerically how that makes sense. So I'm going to go on the smaller time frame. Sorry, I'm not a small time frame. I'm going to go to the 15-minute, and if I were to buy, there's 3 areas right now I'm looking at to take buys at. Here, here, and here. What I just highlighted, these are called gaps. I go over these on a different video. And these gaps are basically how I identify my range. How I identify my trade setup. So these are, you can look at these as demand zones. Okay? Because this is where demand started. So if we turn the chart back to the Heikin-Ashi chart, the green and red chart, notice where I have the rectangles filled, and notice at the bottom of the screen where the volume is. The bottom rectangle that I have filled, the bottom demand zone, this is where on the volume chart, this is where demand started, because look at the volume, right? It gets higher, drops a little bit, and then it gets higher. So this is where demand started in this area. So my best bet um, is the lower part, is the lower range. So what I'm going to actually do is turn the charts back to candles, get rid of the volume chart so we can keep our charts clear. And what I'm going to do is I'm going to actually delete. You know what? Hold on a second. Sometimes you can just trade them all like this and just enter a big trade like that. But you can see obviously that risk management does not work. So what I do is I delete that one and I go for the high probable demand zones, which are the ones at the bottom I said, right? So that it makes my stop loss smaller. And to actually highlight where I have the stop loss, I have it right here, and I'll highlight it so you guys can see where my stop loss is specifically. That's my stop loss, the SL, right there. And then my take profit is going to be liquidity, which is where money's located at, right here at the next high, right? This is our high. I can either target the next high here, or I can go to a higher time frame and look for liquidity higher. But I'm not going to do that because, oh wait, actually, yeah, I am going to do that. This would be, yeah, this is liquidity right here. We have some double tops, some double highs right here. And that's what I'm going to use as my buy because most people are selling there. So smart money is going to take that money out. So you can look at that red line as where money is floating stop losses, money, right? And I'm actually going to, oh yeah, look. Here's more confirmation of my demand zone on the 1 hour. I actually trade. This is another type of trade setup that I trade in my Discord. This is called the order block, right? Engulfing blue candle next to a gray candle with unhealthy price action and volume. So that is an order block, and I'm going to look at this as a trade setup. So this is what I would trade right there. I wouldn't trade this specifically today because there is no there's no US dollar or UJ news today. There is tomorrow at 10 a.m. So I wouldn't really get into the setup today because I trade based off the news when I'm trading Forex. So anything I trade in Forex is based off this economic calendar. I'm not looking at random setups on my own. So the only reason on Tuesday I'm going to look at trading the Australian dollar and the New Zealand dollar is because that's what's moving. This economic calendar is like essentially a heat map that shows you the markets and what's going to happen, and that's what I'm taking advantage of. And this was the pair that we were looking at. All right. So if I'm doing market structure on this pair, completely clear charts, right? I usually like to start on the daily chart, and I like to zoom in. I like to zoom in on the daily chart like this. You see how I'm zoomed in, and then I like to identify my current trend. So our current low is right here. Current high, previous low, previous high. Now, what trend is this? We talked about the three markets again: sideways market, up market, and down market, right? Number 1, number 2, number 3. Is this number 1 or 2 or 3? This is 3, right? Because it's going down. Okay? So right now, we're going up, though. It's 3. It's a bearish market, but we're going up right now. So what I'm going to do is I'm going to wait and identify some liquidity, and I'm going to wait for price to move for me to trade. So right here, you see all these wicks right here? This lets me know that the trend, this bullish trend, may be reversing soon. So what I'm going to do is I'm actually going to mark this as a high right here, since we're on the 1 hour. And I'm going to expect price to actually, from this point, come down here and break below and break liquidity somehow. So liquidity can be your trend lines, it can be your highs, your low, your double bottoms, your double tops. In this case, I'm doing trend line liquidity on the 1 hour. So the second this green line breaks, I'm actually going to look for a sell. And I'm actually going to look for a trade to enter right there. And yeah, guys, it's not that difficult. This is usually what I do. I hope this video was helpful. I know some of it was kind of confusing, but feel free. I feel like you guys should watch the video 2 to 3 times and you'll get it. Take notes. If you have any questions, comment below. Let me know. Yeah, I hope this was genuinely helpful for you guys. I also trade gold as well. Gold is actually a good pair to trade. I trade gold. I like the daily chart and I like the 3-minute chart. So on the daily chart, gold right now is going down. And on the yeah, on the daily chart, gold right now is going down. And the 3-minute chart is where I usually enter and exit off of because of how fast gold moves. So gold looks like it's going to move to this next demand zone because it's going past this one that I drew. So let's see. I actually wouldn't really be let me see. It's possible to get into a sell and sell gold. Yeah, I would. It's possible to sell gold right now. If we flip the chart again and turn the volume chart off, right? We have all this unhealthy price action. We have all these red bars, right? All these red bars. And then we had this wick here, this tail candle tapping into demand before it continues to go down. Sorry, supply. And then we have this other tail candle tapping in, just like the one here, right? Boom. So you could sell right there. We had this candlestick right here showing us that wick price dropped. A wick's happening right now, so there could potentially be a sell. If you were selling this is what I would do. I would sell down to this area. But yeah, guys, I hope this video was helpful. I'm going to end the video here. Peace.